Hey, what's going on, ladies and gentlemen? ANZD here with you. Now, we're going to talk about the job reports that was just recently released by the Bureau of Labor and Statistics. And the job report come out saying that the U.S. economy added 3,339,000 new jobs in May, crushing the expectation. So that's something different. And I'm getting this information right now from yahoofinance.com. And if you want some more information, go check them out. And check out Josh Schaefer, the reporter over there at yahoofinance.com. Have some great reports. So let's get into the report and what it's saying. So the May job report released Friday showed the U.S. economy remains strong with more than 3,000 jobs created last month, while the unemployment rate rose to 3.7%. Now, the U.S. economy added 339,000 non-farmer payroll jobs last month, data from the Bureau of Labor Statistics showed Friday. This marks the 14th straight month that job creation came in above the Wall Street economics had expected, and the largest monthly increase since January. So what that had was a crazy impact on the job market. And not just the job market, as well as the stock market and Wall Street, because with that news, the other news with the debt ceiling getting rise, the stock market, Wall Street was going crazy. So Wall Street had a big bounce on the last couple of days after these couple news that came up. You know, with the U.S. debt ceiling increase, as well as how much jobs were added to the job market. But it's kind of a hit and miss because at the same time unemployment went up. So Friday's report coming less than 2 weeks before Federal Reserve next policy meeting. This is going to be interesting. And with investors still expecting the central bank will pause its rate hike campaign despite the labor market's surprising resilience, data from the CME group on Friday showed there remains 70% chance that the Fed leaves rate 70% chance that the Fed leaves rate unchanged in a range of 5% to 5.25%. So what that basically saying is that they might not raise the Fed rate at the next meeting in June, but that's 70% chance. There's another 30% chance that they might raise it, especially with recession continuing to go up. People seem like they're getting paid more, and at the same time, the job market seems strong. So we do not believe today's report was strong enough to meet the bar for the Fed to hike in June, but raises the risk that the Fed could hike in July. And what I'm hearing is in July, they could do like a double hike. So instead of a 0.25% in July, they could do a 0.5%, 50 basis points in July. That's what I'm hearing. So Morgan Stanley chief U.S. economist Ellen Settner wrote in a note to clients on Friday, while payroll numbers were undeniably strong, the FOMC will be focused on unemployment rate. So here are the key numbers from the report compared to estimates from Bloomberg. Non-farmers payroll, 339,000 jobs versus 195,000 jobs. Unemployment rate was 3.7% versus 3.5%. Average hourly earnings month over month, 0.3% versus 0.3%. So it basically stayed the same for average hourly earnings for month to month. Average hourly earnings year to year, 4.3% compared to 4.4% last year, which kind of, in a way, that's how it was more people saying that we were in the inflation because a lot of people were getting more hourly wages and earning more, but at the same time, they were earning more because they had to step up because people weren't showing up to work, or they would have to get paid extra for filling in for people, just a wide variety of things such as that sort. So the average weekly hour worked 34.3 hours versus 34.4, so it kind of stayed in the same range. And the May jobs reports crushes expectation even as unemployment rises. And I'm going to show you a data that they have from yahoofinance.com with the total non-payroll jobs in 1,000 versus unemployment rate. And it's a breakdown from the beginning of the year up to right now. So from January up to actually April. So employment gains for the last month were revised higher. Updated data revealed 294,000 jobs were created during April, 41,000 more than previously reported. March's job gain were also revised higher to 217 from 165,000 reported. See, this So you got to think, like, are they manipulating the numbers and things like that so the FOMC probably won't rate hike, or they won't pay attention to what's going on with the inflation and the economy, or what's going on? Because a month later, you're adjusting these numbers, and it's kind of, some numbers is some ways off. So making job growth over that month stretched higher than previously reported, 93,000. Wow. So by industry, the largest increase in Friday's data were seen in businesses and services, which added 64,000 jobs. Shout out to businesses and services. In the government, 56,000 jobs were added last month. Healthcare also drove labor gains with 52,000 job addition in May. Leisure and hospitality added 48,000 jobs and 33,000 jobs, but those roles coming in food services and drinking places category. Construction added 25,000 jobs in May, 7,000 role increase from the 12-month average. Nice. And in a statement from President Biden, today is a good day for the American economy and American workers. Friday job report comes in as recent strong economic data reports that some economists called for the Federal Reserve to hike interest rates in June. An upward revision to first quarter economic growth and increase in April job opening and consistently sticky inflation had all weighed in on the Fed future market headlines in today's Friday job report. Nice use of words right there. Sticky inflation. I like that. But while the headline non-farmer payroll addition in Friday report showed a blowout beat, some economists believe that the Fed will consider the increase in unemployment rate and slow wages growth as signs of a cooling economy. So in a way, they're saying that the economy is cooling down, things are slowing up, and basically they might pause the Fed rate hike, but we're not sure about that. Instead of increasing it by 0.25%, and probably just do a pause until July. Now, the household survey painted a different picture, with unemployment falling and the unemployment rate rising to its highest level since October. Nancy Vanden Houten and Ryan Sweet at Oxford Economics wrote on Friday. Very interesting. The conflict data will give the Fed cover to hold policy steady as its upcoming meeting, a pause that has been well telegraphed, but a resumption of rate hikes in July is a strong possibility if job growth doesn't slow significantly in June. And most likely job growth is not gonna slow in June. And it's not just talking about like job growth in terms of people working, such as human work, but some of these job growth will also include AI and robots and stuff like that. So for example, like a non-farm payroll, 339,000 jobs added, that's non-farm. So that means that you won't be using your hands and being mobile. So that means those jobs could be given to AI, whichever those jobs are. But I'm not going to get too deep into that. Probably that's for another discussion, another video. So once again, ladies and gentlemen, the job report crushes expectation even as unemployment rises. And I'm going to show you some more information about that. And we'll talk to you later. I hope you got some information. Hope you got some value out of this, and I'll talk to you later. Peace.